Okay, I will reply it later, Felicia. Okay, so for financial, oh, sorry. I always forgot to open the webcam. Sorry about that. Okay, so financial modeling. What is financial modeling actually? Because okay, for your information, financial modeling is one of the most recognized and valuable skills in the finance industries. But not many people are really understands and master these skills. Okay, so basically for financial models, it's a tool for you to forecast your business financial performance, okay, based on your assumptions. But it's not a crystal ball. It's not throwing two coconut and make sure that you will know that what is the future will do. It's a kind of tool that you estimate your futures, estimate your output based on the given assumptions or given assumption of your futures financial performance. Okay, so this is how the financial models look like. But I mean, to be frank, financial model, there are a lot of different things, a lot of different styles according. I mean, it's not a really fixed styles that one models you can fix every single industry and every single models. You need to have a very, that's why this is one of the skills that we are required so that we can customize our models, this kind of models to suit our industry or suit our target companies. Okay, so before that, there are investors that really, the bosses telling us that one investor interested to invest 100 million into other companies. So how are you, I mean, as a management, you want to receive the fundings, you receive the investments from the investors. You have to decide that how are you going to utilize the money in the most efficient way. So this fella go and do study analysis and based on then study the financial model, then it will, I mean, the financial model can be a very subjective one and become many more models to study. And for this, based on the conversation, we can understand that actually he studied a lot of projects and identified out that, okay, they can invest this project in the expansion of new project in Thailand, because as compared to other projects, this Thailand project can be 20% more profitable as compared to other local property markets. You can see that actually, I mean, in the back view, actually there are a lot of analysis run by the answer. So this is explains that how one of the use to using the financial models. So second things, this boss want to sell the toilet paper manufacturing company already because going to retire after 20 years operating the company, the factories. So you can sell, I mean, in the view that you can sell the company to your competitor actually but one question for you, how much your company worth? How much your company worth Because unlike the listed co, there is the target a very clear market price available for you. For private companies, sendirian berhad, you don't have a really transparent market value that show you that your company worth 100 millions or 300 millions or right. So you need someone to value that how much a company worth. So I'm from this industry actually, for informations. Actually, that's why we always use the financial modeling models to calculate and estimate the valuations of the company. Okay, so based on the analysis in this conversation, the company is actually worth 300 millions at least, okay. Okay, so what is actually financial modeling? How are you, I mean, where they can use? The financial modeling can be used as a budgeting and forecasting for strategy planning. I mentioned just now, like Mr. DIY, you are targeting to open 100 floor, right? how much money you can earn. Why not 50 only? Why not 45? Okay, because some of the you can, so let's say maybe your based on your capacities, you only can open 30 store only. So you have to be selective on which location will bring you the most profitable ways. Okay. Second will be the growing the business organically. Okay, so this one I mentioned already, right? So valuation is another where I mentioned already in the beginnings about how much the come to identify and estimate how much the value worth. Okay, raising capitals. Raising capital is means that you are looking for funding, no? So looking for funding, the funding can be separate into two. Either you can borrow from banks, which is your debts, or either you can look for your investor to invest in your company. Okay. So acquisition plannings, which you can identify out. Actually, the acquisitions means the synergy effect of the company. How much cost if, like the example just now, I mean the bosses is selling the toilet paper companies into their competitor, right? So let's say if the competitor buy over the companies, so how much money that they can make additionally, and at the same time, how much cost that they can save, because because one is acquired become one company under the same group. The boss only got one, so you don't need to hire two boss already, so cost saving from that aspect already, but revenue, because you got additional revenue, additional clients, another revenue, another sales for you, okay. And also capital allocations, which is the first projects, first conversation, first samples, which you need to decide that which project will bring the greatest value for you to invest, okay. And also company restructurings and also impairment testing, okay. So most important is like, I mean, those acquisition, those corporate exercise, you need something to quantify it so that it will be telling you that which options or which way is the best way for you to proceed. Okay. So to be frank, financial modeling doesn't need a very tough aspect to do, tough models, tough software to do. It can be very simple actually using Microsoft Excel. And I believe that most of you have it. Even you don't have it, now online, the Microsoft 365 got this software for you to do for free, right? So as mentioned, to do a financial modeling, you just need to keep on the rule of thumbs, KISS, which is keep it simple, stupid. You don't need to do the models as a very complex, and you use a lot of formula, Excel formula to do this, then you get these numbers, right? The more complex your models, the higher the risk that you will get errors in the models. Okay, so I will explain that what kind of the details you need to take a look on it to produce this. So before that, to do a financial modeling, typically it will cause one of the very basics that we encourage people to learn is called three statement models, where it is a income statements, balance sheets, as well as the cash flow statements. This three is very important because you have the element on it to decide the what we call that your input of a models. Okay, so of course, to be out of these extents, aside from these three statement models, you can calculate DCF models, the merger models, IPO models, the leverage buyout models. So this DCF model is one of the very common models that we are using to value the companies, okay, including in fund management firm or private equity as well as corporate finance valuation teams. Okay, mergers model is normally used by the private equity firms where they need to show a private equity firm of deal advisory firms where you need to show people that what is the potential benefit that they can earn via these merger and acquisition deals. Okay, IPOs offering models which shows that once you get the monies, how much money you need to utilize. So technically, the investment banker will do it. Leverage buyouts means for those private equity firms that will do it. Okay. Of course, there are a few sum of part models is a blended models, the consolidated models, which another's is which very similar are these two actually. Which is you consolidate all the business because most of the times the valuations approach might be a bit different based on your industries. Like for example, IT industries, the valuations. This one I don't want to confuse you. Okay, so never mind. Okay, never mind. And also option pricing models. You need another input, another model for you to warrants, options, call option, foreign contact, forward contract. You need something to value. Okay. Okay. So in order to build a financial models, you must wearing three hats actually. The first one, you need to be a finance expert, which means you need to well equipped with the accounting knowledge, because you are dealing with revenue, you are dealing with balance sheets. So one of the minimum requirements is you need to make sure your balance sheet is correct. Okay. I believe that some of the accounting students, especially for those accountant, I do meet more than 10 one friends that do more than 10 years as an accountant, but she's still facing a problem to balance out. So accountants actually don't really require to balance the balance sheet, to be frank. Okay. But in order to do financial model, unfortunately, you need to make your models balanced, because whenever your balance sheet not balanced means something wrong with your Excel already. Okay. But anyway, it's not really that difficult. Okay, especially in the thing I'm going to share later. Okay, this next one is the spreadsheet visits. You need to push Excel, to modify it, and that's come your magical numbers. So that means that you need to input something so that you can come up with the output. So that output is your magical numbers. Okay, so for example, like valuations. So we already built the models already, right? So that's why I come to our assumption and also the input. Every input that we insert, it will give us an output. So that output is a result that defines. Next, come to virtual architectures. Like virtual architectures means that you are going to plan how to do your financial model in a very easy way and understandable way. Okay, so first, before like architects, before you build the building like a condo, before that you had to plan first, right? You had to plan first, what are you going to do, how much, what is the elements, what is the element or material required. Similar in financial models, you need some things for you to plan. So that's why you need to plan first. Based on what you have, only you can do it. Okay, I will explain it further later. So for the essential elements, there are a few. So generally, only got 6 for you to consider. So I noted that there are a lot of people who is not from finance, or maybe they are a little bit weak in finance backgrounds, a little bit in accounting background. So maybe I just give you a brief introductions about what is the revenue, cost, extra things. Okay. Okay, what is revenue? A revenue model is a way that define how your company generate income, how your company generate money. So, okay, of course, the company can generate, it means they had to sell. I believe that it was easier to understand that where the company sell things and it will get money, or the company enter contract to provide service or something, it will get money as well. Okay, so in generally, the models can be identified out in 2 ways. Either you get your quantity times your price per quantity, or it's a contract mode for you. Once you provide the services, then you get how much. okay, or it's a hybrid modes where a combination of these two lah, okay. So it's a very important, I mean, to understand, to build a financial models. Why? Because the business model itself is actually, I mean, for business models, for the companies, the most important is that you need to have cash. So you need to have income first, only you can generate. And you need to have share first, you need to have sales first, only you can generate income, right? So that's why you got income, you can pay for other expenses, other things. That's the importance of the revenue. So one of the key element, one of the most important key element that we need to take in consideration is the revenue models. Okay. Next is the cost models. Cost models technically is the cost is the expenses for you. So normally there are a lot of ways to classify the cost actually lah. For me myself, because since now is a very introductive workshop for you to understand what is financial models, well, I just take a use of one of the most popular ways to identify, which is the fixed cost and the variable cost. So as the name mentions, variable cost means the cost that based on the amount of the outputs. So means if you produce, you sell more, or you produce more product, then your cost will be higher, or you produce less, your company your cost will be lower. Then fixed cost will means it's a fixed cost regardless of how much your company or earn. Okay, like maybe like our rental expenses, the renter, the landlord doesn't care that how much you earn or how less you earn, so the rental expenses will always be the same, right? Then also for salary, your salary, like maybe the boss pay you already ma, so doesn't mean that your how much you earn or how much how much you do or how much you didn't do doesn't affect your salary, except your bonus lah. That's a different story lah. And so insurance, the premium payment is also the same, right? It's a fixed cost. Okay. Now come to depreciation and capital expenditure. But before that, I would like to draw out that what is the difference, what is the property plans, property plant and equipments. Okay, what we call is PPE. PPE are actually company physical and tangible long-term assets. So means like big assets. Examples like you are buying, when you are buying a land, a machine, so this is what we call PPE. Or you are buying a chair, you are buying a furniture, or you're buying a Mercedes, this is called PPE, an asset for you. Okay, so this in accounting perspective, asset can be classified as a different way. So means that this one is called capital expenditure. When you buy your PPE, when you buy your asset, you don't recognize it in the income statements. Okay, so in the view that you recognize it in your asset, and at the same time you depreciate out. Okay, so means okay, so before that, capital expenditure can be classified as a two way. The first one is the expansion capex. The second one is the maintenance capex. What's the difference? Expansion capex is like you want to build something or you want to expand your business. The additional cost that you need, additional expenses that you need to buy in order to build to expand your business. Okay. Maintenance capex is like a maintenance. Like for example, impossible you can assume that your machine, your machine, your office equipment can be so vulnerable and won't book up some days one. That for sure that unfortunately touch roots that your machines can be come to the day that it will be malfunctions. You need something to fix it. So this is the capital expenditures. Or you need to replace the machine again with the new machines. So this is the maintenance capex. Okay. So in the ways that we recognize capex, we know 100% that you, for example, I buy the asset in 100 millions, but in the accounting perspective, it will not charge 100 millions into your profits directly because you capitalize it. What's mean like capitalize? It's actually that depends on how much your asset value have been used up. Like for example, I buy this handphone. This handphone I can stand for 5 years. So means that my total useful life is 5 years, right? So it's 20%, no? So maybe first year I charge 20% first. Second year I charge another 20%. Until fifth year I fully charge it up into my P&L lah. Okay, so this is how the depreciation works. Because impossible that if I buy anything, I just charge it to P&Ls, then gone already lah. Because in the way that income statement, P&L, profit and loss statement is the way that to prove that how much monies that you can earn on that particular periods. Because normally the P&L will be on a 1 year basis one, right? So impossible that you charge all in 1 year, then the second year you don't have any charge, then your P&L doesn't speak correctly already. So remember what I told you, profit and loss, I mean, every numbers actually speak of stories. So depreciation is one of the way to tell you that, look, I need to differentiate out. I spend 100 million to buy this, but this 100 million can tahan me for the next 5 years. So I can distribute out to 20%, 20% until up to 5 years. So that's how the thing works. Okay. Now come to taxation schedules. Tax always a compulsory financial charge to the companies because we need to pay tax to the governments. So there are a lot of tax, the deferred tax, corporate tax. Also you got subsidies, also got withholding tax, also got SST, right? So in the way that it makes the tax schedules become very complicated already. So since like today is an introductory way, I just focus on corporate tax only without touching anything about the deferred tax, this SST, I just ignore that, okay? Okay, the next will be on the the corporate tax. So for your information, generally Malaysia corporate tax will be 24%, unless you are the SME, your share cap is less than 2.5 million, then you got 70% this, not 70% is your tax rate will be 70%. Okay. So for working capital schedules, what is working capital? So working capital is a financial metrics for you to identify your operating liquidity available to your business. For example, I made a 1 million sales, right? But I send my stock to someone already, to my client already. But this stock worth 1 million, that I can earn 1 million. But my customers always need to pay me after 3 months. But my supplier always need me to pay them first before my client, even though they don't really care that their customer pay me or not, right? So that's why I need these two. Okay. Also, sorry. Yeah. Okay. At the same time, I also need to reserve some stocks in my warehouse in case I got potential sales, right? So what is the key consideration, key element insights? First is the inventories. I need to reserve the stocks. Second is the receivables, about my customers, how long my customer can pay me back. The third one, which is the last one, the payables. My supplier only need me to pay him first or pay them first or before my customer can pay me, right? So this is a cash flow that you need to consider. Because a lot of the company actually they don't really taking care of their working capital, so makes that the company always has that cash flow problem. So they got no enough money to pay their supplier, they got no money to pay their employees, their staff. This is the way I want to tell you lah. So this is a formulas for working capital. Okay, so this is very important in order to build the financial models lah. Okay, later I will show you lah. Okay, so inventory means that you need to take your inventory to divide it by your cost of sales minus multiply by 365 days. Receivables means receivable over sales times 305 days. Payable is payable over purchase times 325 days. But for your information, most of the times in the payable, we always can't get the purchase amounts one because of various of the issues. That's why sometimes we just straight away use cost of sales instead of the purchase. Okay, now next to the financing schedule. What is financing? Means that you need to get money from someone, right, for investing or other purposes. Okay, so one you can get from the loan, which is from the banks. So of course, when you get the debt, your loan, so you need to pay interest. Alternatively, you can get your equity financing from the investors to invest on you. Of course, the cost of funding will be the dividends, means you need to pay that in dividend, or maybe the capital appreciations, means someday when they sell your shares, they can get money back, similar to private equities. So okay, so now proceed to the back practice. Before I will later, because later I will show you that what I'm going, how to do a financial models. But before that, to show you that what is the best practice only. First, you need to get it clear. First, you need to get it clear. What is the objective, what you want to do, and start solely. Okay. Second thing, you need to understand. The expertise first. So, who will be your reviewer? Is it entrepreneurs? Is it analysts? Or is it all accountants? So I mean, depends on the understanding lah. Because normally analysts will have a very high understandings about what is financial models. Entrepreneur always stand in the entrepreneurship perspective, where how much they can earn money, what is the ROI as a drop only lah. So all accountants means they still stick with the old styles which they're not really familiar with Excel, etc. So most important, again, keep the formula as simple as possible. Okay. So the third one, set your global setting first. So means that you need to plan the structure as also skeleton of the models. Like I mentioned just now, the architects. You need to plan first before you do hands-on. Okay. Also keep it simple and stupid, and also make the things like complex and always easy. So now you can start. So laying out the models. So models always can tell a story. So we always have to put it in a story out and put it in a proper manner so that you can explain to people in the numbers. Okay. And of course, when you do different things, different inputs, put a different colors. Okay, this one I will explain later. Because normally say for hard-coded figures, we will put a different color or different type to tab to identify it. So you can see it clearly that what kind of the models that you will require lah. Okay. And also make sure the model is clean and better organized. Okay. Now be consistent. Don't like now this page I use blue color, next page I use red color, the next page I use yellow color again. So you can't very messy. So make sure you use the same colors for the same format, and also use the same size, same forms, and same formattings. Okay. Like I say, don't be too colorful, and also double check your formula, and most important, keys. Then only one input for one data point only. Don't be complicated and just blank until very confused. Okay, later you will know when I explain it. Okay. Okay, so team modulars means that you need to plan accordingly and no hard-coded inputs. So like for example, when we compute the text, right? So we need to compute. That's why we need to we try not to put it in like this amount times 36%. Sorry, this one is 34%. Don't try to put hard-coded figure. Hard-coded figures means a draw figure in the formulas. Don't put that. Okay. I will explain it again later. Remember. Then you will get a very clear understanding again. Okay. So make your all calculation visible. Don't hide it here and there. Make sure and then don't let people find it. Okay, that's the wrong way. Okay, so guiding against errors. Most of the times errors always in the referencing one, they point at the different link, they link in the different files, everything, and also errors in the functions that you use the different function of formulas, and also range, also different formula lah. Okay, last but not least, a couple of things that you need to hands-on first before you get familiar first before you can start. Which first, familiar with the Excel functions. Okay, in Excel, probably one of the most there are a lot of functions. I'm not sure it's the most or not. More than 500 functions in Excel. Okay, but don't worry, you don't necessarily have to understand all the functions. But at least for those useful ones, yes, like some if average on net present value or index VLOOKUP if this one. If is a very important tools for you. So if you're really interested, you're really keen to learn about financial modeling, make sure you get clarified about the E function. Get on your hands-on on the E functions, and also let your reviewer easy to understand. So if you want to insert a comment, just insert a comment, right click and insert comments. Don't stuck it somewhere. Okay. Then also provide a way to catch errors, because you might see actually later you may know the models can be so huge, so there are thousands of linkage, or maybe more than 10,000 of the linkage in the models. I'm sure that there might be some things that you can link the wrongly, right? So make sure you always have something for you to check first, like balance sheet. For example, balance sheet, very simple checking is like you need to do a parity checks. Means that you have to check that the balance sheet is balanced or not. If not balanced, then so something's wrong already, but the balance sheet right doesn't mean that it's still right. It might be something to do wrong, okay. But last but not least, always save often, okay, because Excel always clash one, I tell you. Okay, so make sure to prevent this tragedy happens. Make sure you save first, and also always enable the auto recover features. And also you name yourselves, always name with the dates or maybe the version, which version. Don't put like maybe in your FYP or your assignment latest, final. Right. So okay, so now come to the financial modeling sample case where I will showcase you about how to do a financial models. Don't worry, it's a very easy one. Okay, so if you really follow my steps, then you will know how easy for you to do first. Okay, so the community team, can you share them the work file first, the Excel work file, in the case that some of them need to try. No problem. So before that, I will explain to you about my the case study. Okay, so this company is a is a retailer of the watch companies which selling premium watch. So you're required to build an integrate annual models for this company for the 5 years, starting for 2021 to 2025, using a historical number and given assumptions. So in this assumption, in this case study, assumption is given already, where the management expected to sales to the sale volume will increase every 3 years, 3% every year, and the selling price is 105 and with an annual increment of 5%. The cost is actually the gross margin is only 40% only, which is this, means that this one is a variable cost, right? And operating cost is expected to be 100,000 in 2021 and expected to grow an inflation of 3%. So means that the operating cost will not be affected by the quantity. So means the operating cost is a fixed cost, right? So this one is a variable, this one is a fixed cost. So now proceed to taxation. Taxation is 24% now. Then working capitals. The working capital means the average inventory turnovers. What is average inventory turnover rate is 30 days. Means that average when I buy my stocks, my stock will be in my inventory for more than is around averagely 30 days. So average receivable turnover is 10 days there. Means what? Whenever I sell, my customer will take 10 days averagely to pay me back. Then supplier is 45 days there. Means I need 45 days averagely to pay my customer, the suppliers. Okay, and this is assumptions. Then also the loan and interest. The loan prepayment is 30K per year and 10%. The interest rate is 10%. And also the depreciations, the PPE in the depreciation using the straight line, the building is 50 years. The other PPEs is 10 years. Okay. Okay. So now I'm going to show you how I'm going to do the financial models. Okay. First, the first assumptions is the company expected a sales volume to increase every 3 years, right? So we just build first, because for these I'm already built a surface for you to understand how to build the models already. Okay, so basically I just put 3% every year, correct? So here I put 3%. Then later I need to link it with the growth. So because now my actual sales last year is 20K, so I need to link it with 1% with 3% growth, right? So the formula should be this. Okay. My 20K plus 1.03, correct, ma? The formula is like this only. Very simple. So after you get the second one, so but don't be so stupid. If the second one is very similar, you just drag in it only. Or you if you are very old style people, then you can type again, but I don't think it's necessary because it's very similar, then you just copy and paste only. Okay. The next one. The selling price in 2021 is 105. Okay. So the next one will be 5%. So every time when you build the models, make sure you put your assumption first, or you build the models first, because now it's given together with the assumption first. So I just input the assumptions so that I know, because that's why I know what is my input already. So that's why I can use my input to build the models. Okay. So this one is to identify out what is the growth. So as compared to last year, the selling price this year is 5% growth. Then next, I need to do is the same thing, right? Okay, means next year I have another 5% growth. So this is my 5% growth. So similarly, then after that, I got my revenue already, right? Now, because I mentioned this now, right? Quantity times price. Okay, so the quantity is 20,600 times the price is 105. I got this amount. Okay, so I just copy it. So basically the link will be the same. Okay, so in addition, so when I want to do the analysis, I need to identify out how much, what's the difference between both years. So as compared, I can see that for my forecast in 2021, as compared to the actual 2020 actual result, historical result, my growth is 2%, is 8%. So I can see actually, others also 8%, something like that. Okay, just this, but anyway, the scenario won't go that perfect that all is the same. Of course, you need to do your own analysis and judgments on the assumption used. But because this just to give you introductions on how the financial modeling looks like. Okay. Okay, so now come to the cost models. So the gross margin is actually 4%, 40%, and they are going to maintain it because the supplier is actually owner's relative. So that's why easy already, you need to put gross margin, put 40%. Okay, and then gross margin put 30% already. So you get your revenue times 1 minus, okay, because why? So means gross margin is 40%, means your cost is actually 60%, right? So need to 1 minus C18, which is your margin. So it's 60%, no? So means 60% times your 2.16 million cost. That's it. You got your cash of sales, cost of sales. Okay, next is the operating cost. Operating cost for 2021 is 100,000 in 2021. Okay, you put in the number first. Sorry, you put in the number first, then the expected growth is 3%, correct? So first, then you need to do is additional 3% is 103, correct? Okay. So once you need to get the difference. Okay. Okay, can. So next, come to turnover. Okay, this one I explained already. So 30 days for my inventory, 10 days for my receivable, 45 days for my 45 days for my supplier. All is the same idea. Okay, this one you can see actually that in fact that I have always linked to, you can see but instead of put my figure besides that, because I always links like equal to for my revenue, I always equals to the link of my output cells. So that's why I can get the numbers. So this is the essence of the financial modeling. It's a financial models where you need to always link it with your original data. So whenever the output change, then your output here also change also. Okay. So this one is the revenue. So then, okay, the next one, the assumption is the number of days always 365 days. Okay, one more thing you may notice, okay, one more thing you may notice is actually that, I mean, for those input and assumption, you notice that actually I put it under the yellow column or brown columns under different colors. Okay, so means that actually the yellow color one is actually a assumption, which is your input that you will be used for your answering your models. Okay, so what's the black blue font colors means that it's a hard-coded figure. My style you can be different, but just to draw with you that what kind, I mean, the introductive, that how to they separate it out Okay, so for the black one should be the formula already Okay, so normally the black one always carry a formula. The black founded one always carry a formulas. See, look at here. Here, okay, here also formula which link what we call link at Okay, so yeah. So that's why you can see here also. But this one is a hard-coded figure lah. Okay. Okay. Next, we are going to compute the working capital already. Assume that the inventory is 30 days. Like cost of sales multiplies by 30 days over 1 year. Got how much? Of course, I got 1660 because initially means that your stock always keep in your inventory always keep in your warehouse for 30 days. So 30 over 365 days is how much? Is around 8%. So means that among my cost of sales of 3%, amount of cost of sales of 1.297 millions. Got 3% is actually in my stocks, right? I just put that out. Similarly for revenue, also same. My client need to take 10 days to pay me back. Over 100 is 59,000. Okay. So and similar to this. So actually this one is just based on formula only lah. It's quite straightforward lah. Okay. And also if you can notice as mentioned just now in the beginning right, I don't actually put 365 as a hard-coded numbers. So I always link it and put it outside. In the case that when people want to change the figure, then they can change it off. Okay, so I'm already net working capitals and drag it out, so it will be the same as that. Okay. By the way, what is net working capitals? Net working capital is, you can see in the formulas, is actually a way of working capital in the net assets. By goodness sakes. Okay, so basically it's inventory plus your receivable minus your payables. Okay. So next one, you need to compute. After get ready, you need to compute what is your differences. Means your change in the net working capitals. Okay. Now, okay, so that's it. You got the inputs. Okay. So now is the PPE. So my PPE, my capex is assumed 500,000. Then next one, because here I got mentions maintenance capex maintenance capex always in the PPE one right. So my building cost always maintain. Other PPE might change a bit. Is that for inhalation the maintenance capex will always change 50k per year lah. Okay, additional 50k per year lah. So now we are going to calculate is the depreciations. So the depreciation, the accumulate depreciations, and this one is the total. Open. So opening always equal to closings. Okay. Okay, now next. So in this, we have to compare with we had to monitor the depreciation of the building. So the depreciation cost is how much? 500k multiplied by the buildings. Okay. So at here, you can see actually I make a trick here where I need to press F4 which lock the link. So that's why when I link the file, because initially if you don't link and whenever you drag the numbers, the link will the cell will go with you. But whenever I link it, you can see actually this is also one of the skill that you need to learn. Okay. And then for the other PPO also very similar. So after that, you ends up you get the numbers. Okay. After that, you need to calculate the net book value. The net book value is actually your total cost minus your total accumulated depreciation of the years. So end up you get this. Okay. The next one is regarding this. Okay, this one is 20K. Okay, sorry. For depreciation, I got another consideration for you. Because since in my ideal case, my depreciation won't hit 10 years. But in the case that maybe for depreciation only 3 to 5 years, so you have to consider if the PPE is fully depreciated. So means there's another format here. So means you can notice that actually the depreciation you need to compute separately by each of the years. So this one is a bit more complex already. So if you are interested, so maybe you can let me know. I can sharing the links about this about the capex, how to build the models. Okay. I'm sorry. That's my fault. Okay. Okay, next. In this, we are assuming that the total principal is 300,000, excluding the interest. Okay. So this one is opening over equal to the brought forward closings. Okay. Okay, so firstly, we need to, for loan borrowing, you get first what is borrowings. Then only we can compute the interest expenses. So the balance of the loans, then we can compute the balance on the interest. But just a little bit trick that you can notice actually, the interest rate, I mean, what I compute is based on the opening and closing of the average opening and closing. Then I multiply with my interest rates. So it's just a method to average out the average. How to say to compute the interest based on it. One of the method I mean, some of the people they prefer to use it multiplies by just the closing only like what I show you is. So some of it they prefer to do like this only, depends So one of my approach for you to learn okay, for you to consider, not learn, sorry. So after that, you need to compute the profit before tax. Okay. So the profit before tax is this, then only you can consider the taxations. So the taxation is the profit before tax multiplies by 24%. Need to lock that so that it won't move. Because if I don't lock, you see, if I don't lock, then the problem already. You can see the linkage run already. So I need to lock these. So that's why. Okay. So in order to lock, you just need to press F4 only. Okay, so another consideration for you, because in my case, it's really an ideal case where my company is making profits. What if my company sometimes is making losses then my taxation might got problem already, right? So you can see actually if in this case I will use the if assumptions. Okay, to share with you, what's the if assumptions actually? To say that if my profit after tax, my profit before tax is largest, if it's larger than 0, means positive greater than 0 means positive. So then I can multiply with the so I can multiply and get my interest tax, corporate tax. But what if this one, if it doesn't fall in this logical test, then my will be zero already, right? My taxation will be zero already. Okay, so something like this. So this is a taxation with if formula. Okay, just to show you only, because in my following case study, I don't do that yet. So if this one, I'm making 10 million losses, but you can see actually the both differences, the taxation based on my previous situation, the taxation you can see actually they become tax refund already, which is impossible lah. But this one is zero, right? This one, if I make 500,000 losses, you can see zero. But this one become tax refund already, negative already, which is theoretically impossible lah. Okay. Okay, just 3 bets. Okay. So now almost we have come to the end already. So for this, you are supposed to actually link the formula one by one. Okay. Link one by one. But actually, in fact, that I already linked it already. So I just pull out lah. Okay. Like operating cost is this, operating cost, the cost of sales is this, right? Then the depreciation, depreciation is this too. Okay, then my interest is this, my taxation is this, revenue is this, and also my cost is this one. Okay, just to show you only. And then this one also similar. The profit PPE is here already. The PPE is here. Here. And also the loan is here already. And also the working capital is here already. Inventory, other receivable, is already here already. So I just drag all only. So basically, you have to link one by one, just because that this is a ideal case. I mean, in order for me to showcase, I can do it quickly for you, for your understanding. Okay. So you might notice that the cash, where is the cash? Why here put -0 one? What is the difference there? So for cash and bank, actually it can be computed with using the cash flow statements. Okay. So means if I get the cash flow statement, this is also linked already. Capital expenditure is already linked. The financial activity and also the finance cost also linked already. You just put a number. So this here is the cash. Okay. Next to this, share cap always same one because we don't have equity financing. Man, what is retail earning? Retail earning is the earning plus your current earnings, the profit after tax. So still same. Okay. Now you get the total answers. But last but not least, this is how your full models lah. Okay, you can refer to that models to build your own models that. Okay, so last but not least, you need to do some checking on this. Okay, so this is a priority check lah, like I mentioned just now. You need to check that whether your balance sheet is correct or not. Okay, so what if you see, because now is correct, means my model is mathematically correct lah. So what if at this formula I link wrongly, I link the formula wrongly, you can see actually there's a figure there already. So if I see, okay, this amount, this parity check got amount there here, means that my models got wrongly already. So I need to identify what is the differences. Is caused by this or caused by which. So I need to check the formula one by one to find out my errors lah. Okay. Okay, so far you got any question first on your side? So I believe that it might be a little bit difficult for you. So you can actually refer to the case study, the sample case for the answers lah. So basically it's almost the same for you to understand what kind of the models that you need to do lah. Okay, how to build a models, etc. So yeah, that's it. Okay, so now my turn done already. So I need you to actually help me, not help me. I mean for you, I had a case study for you actually. Don't worry, it's a very much simple for you. Okay, so the case study now is about Happy Together Siang Berhad, selling of the sexual wellness product lah. Okay. Okay, so you are giving 3 years financial. The community team, can you share with them the case study working file as well as the case study? Okay, but don't share the answer yet. Thank you. Don't share the answer again. Don't share the answer. Okay, so now, okay, so I means that you will be given 3 years models for doing okay, to do. Sorry, I made up times. Too many files already. Okay, so I will give you 3 historical numbers. Then the assumption is actually here already lah. You can just for your simplest reference lah. Otherwise, I got a PDF for you also lah. So you are required to build a 5 years models. So the sales is follow this quantity lah. Okay, so the selling price might be a bit different because you are projecting 21 ringgit 50 cent in 2021. Is 3%. The increment is 3%. Then the gross margin is 45%. The operating cost, the fixed cost is 231,000 in the first years. Then the secondly and following increasing of 5%. Next, the taxations, all is very similar as compared to the model I did just now. Okay, so the interest is 10%. The interest is repayment of 5,000 per year. Then this one is a bit different that you need to draw down a loan actually. Okay, draw down a loan because you want to buy some things. Okay, but anyway, still very easy one. If for the loan one, basically you can actually plug in the figure here, the 500,000, right? Like this only lah. Okay, so others is very simple. So if you got confusion, then you can take a look on these files. The sample case answer that I sent to you is actually very similar with the case studies that we'll be using. Okay, so don't tell me it's very difficult. It's very simple. If you got some confusion or some question, you can straight away revert to the sample case in my previous sharings. It's a very similar. I just modified the questions from the initial plans. Or you got any question, you can ask me straight lah. Okay. Okay, then yeah. Okay, and last but not least, after completing the quiz, I will need to find out that whether if your model is correct or not lah. But impossible that I can go through 100 plus models, right? So that's why I will give you 18 quiz question to solve it so that I can identify how master your understanding on this lah. Okay. So after that, the price. Okay. So of course, the quiz there will be some prizes lah. For those top 3 participants that have the highest score, I will you'll receive a free consultation section with a mentor from his or her dream industries. Means that I will get contact one of my friends. Then in for example that you want to be in fintech industries or you want to be in investment bank industries, that I will get one of my friends who is in that particular industry to give you some advices that. Okay, so because trust me, these advices will be much benefited because like outside the industries you need to pay 300 or 500 for this kind of consultations. Okay, so yeah. Okay, so or you got if you got any questions or maybe you can straight away ask me on the spot or maybe on the group chat as well lah. Okay, so don't worry, it's very easy questions lah. Because like for example, the first questions I need to ask you lah. Very easy only. You need to ask you what is the revenue for 2025? The second questions is about what? Oh, sorry, oh no. Let me check my questions first. Okay, the first question is the revenue. When you build the models, then you should know result already. The revenue is here lor. Then the cost of sales is here right? Something like that. It's very easy only. But this is the sample answer lah, not the. It's a sample case lah. Very similar. I just tell you where is the amount only lah. Where is the answer that you can get only lah. Then the quantity is actually here lor. 2015 need to add up So this one is a quantity already lah. Okay. Okay, then etc. lah. Operating expenses is here already lah. Almost is very similar for you to do it lah. Okay. So I think I will give you 45 minutes to complete the case. But in the case that you meet any problem, then you can look for me lah. Okay. I'm still in the groups. Then you can try look for me. Okay.
Every time I wake up next to you, I talk to God. And I'm so damn grateful cause you make up for the things I'm not. Didn't know I needed nothing till I needed you. In a world that's spinning, it ain't easy letting go. 8 billion people, we just looking for a hand to hold. Everybody's trying to find someone to hold on to. It's okay, we all try to pretend that we're brave. When I'm weak, yeah, I'm strong cause of you at the end of the day. Everybody needs somebody, somebody to remind you that you're not alone. Who's gonna defend you like an army and never let go, never let go. Everybody needs somebody, somebody to wake up to when everyone's gone. So if you need me, then you got me. I'll be the shoulder you cry on. Everybody needs some. Everybody needs somebody. Every time I look at you, I'm looking at a star. It's the way you light up every room, just being who you are. Didn't know I needed nothing till I needed you. Oh. But before I met you, I never believed in magic. You stole my heart before anyone knew you had it. I know that you know what we got. It don't come easy. It's okay. We all try to pretend that we're brave. When I'm weak, yeah, I'm strong cause of you at the end of the day. Everybody needs somebody, somebody to remind you that you're not alone. Who's gonna defend you like an army and never let go, never let go. Everybody needs somebody, somebody to wake up to when everyone's gone. So if you need me, then you got me. I'll be the shoulder you cry on. Everybody needs some. Everybody needs somebody.
Little step.
Yeah.
Step down.
Caitlin, what are we doing here?
Step down. Happy birthday!
What is this?
It's a private concert by your favorite band.
Ah, you got the Killers! You got the Killers to play for my birthday?
No.
Brandon! Yo, Ronnie, let's do it!
Yeah.
Oh, he's gonna be singing right to me.
He won't though, because he's not here.
Huh?
Yeah, it's not the Killers.
Who is it?
Imagine Dragons.
Well, that's your favorite band.
Yeah, I know.
Well, I don't want to hear those guys.
Well, you know what? They're like, I don't know, 7 feet away, and also it's too late, so just enjoy.
Okay.
You know I got your number all night. I'm always on your team, I got your back, alright. Taking those losses if it treats you right. I wanna put you into the spotlight. If the world would only know what you've been holding back. Heart attacks every night. Oh, you know it's not right. I will follow you way down, wherever you may go. I follow you way down to your deepest low. I'll always be around, wherever life takes you. You know I follow you. Call you up, you've been crying all night. You're only disappointed in yourself, alright. Taking those losses if it treats you right. I wanna take you into the sunlight. If the world would only know what you've been holding back. Heart attacks every night. Oh, you know it's not right. I will follow you way down, wherever you may go. I follow you way down to your deepest low. I'll always be around, wherever life takes you. You know I follow you. La 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 la. You know I follow you. La 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 la. Wherever life takes you. You know I follow you. You're not the type to give yourself enough love. Should live a life hand in a tight glove. I wish that I could fix it for you. But instead I'd be right here coming through. I will follow you way down, wherever you may go. I follow you way down to your deepest low. I'll always be around, wherever life takes you. You know I follow you. La 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 la. You know I follow you. La 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 la. Wherever life takes you. You know I follow you.
No, guys, we have like.
It's beautiful, it's bittersweet. You're like a broken home to me. I take a shot of memories and black out like an empty street. I fill my days with the way you walk and fill my nights with broken dreams. I make up lies inside my head like one day you'll come back to me. Now I'm not holding on, not holding on. I'm just afraid that you're gone. Not holding on, not holding on. Beautiful mistakes I make inside my head. She's naked in my bed, and I will lie awake, making beautiful mistakes. I wouldn't take them back. I'm in love with the past, and I will lie awake, making beautiful mistakes. Na na na, in my head. Na na na, in my bed. Na na na, eh. Making beautiful is pitiful. I can't believe how every day gets worse for me. I take a break, I cut you off to keep myself from looking soft. I fill my nights with the way you was and still wake up with broken dreams. I make these lies inside my head feel like they're my reality. Now I'm not holding on, not holding on. I'm just afraid that you're gone. Not holding on, not holding on. Beautiful mistakes I make inside my head. She's naked in my bed, and I will lie awake, making beautiful mistakes. I wouldn't take them back. I'm in love with the past, and I will situation's beneficial. Doing something different, got me looking stupid. The only way I'm coming back to you is if you're dreaming. Lucid, prove it. If you made a promise, then keep it. Why you wanna lie and then get mad? I don't believe it. But really, I was doing just fine without you. Looking fine, sipping wine, dancing on club couches. Baby, why you wanna lose me like you don't need me? Like I don't block you and you still try to reach me. How you figure out how to call me from the TV? You running out of chances, and this time I mean it. Yeah, bet you miss my love all in your bed. Now you're stressing out, pulling your hair. Smelling your pillows, been wishing I was there. Sliding down the show wall, looking sad. I know it's hard to let go, I'm the best. Best you ever had, and bet you gon' get. And if we break up, I don't wanna be friends. You toxic.
Beautiful mistakes I make inside my head. She's naked in my bed, and I will lie awake, making beautiful mistakes. I wouldn't take 'em back. I'm in love with the best, and I will lie awake, making beautiful mistakes. Na na na, in my head, na na na, in my bed, na na na, making beautiful mistakes. Na na na, in my head, na na na, in my bed, na na na, making beautiful mistakes. Two hearts, one valve, pumping the blood. We were the flood, we were the body, and two lives, one life, sticking it out, letting you down, making it right. Seasons they will change, life will make you go, dreams will make you cry, cry, cry. Everything is temporary, everything will slide. Love will never die, die, die. I know that birds fly in different directions. I hope to see you again. Sunsets, sunrises, living the dream, watching the leaves, changing the seasons. Some nights I think of you, reliving the past, wishing it lasts, wishing and dreaming. Seasons they will change, life will make you grow, death can make you hard, hard, hard. Everything is temporary, everything will slide. Love will never die, die, die. I know that birds fly in different directions. I hope to see you again. Birds fly in different directions. When the moon is looking down, shining light upon your ground, I'm flying up to let you see that the shadow cast is me. I know that birds fly in different directions. I hope to see you again. Birds fly in different directions.
that shit is over. Finally. I don't wanna be another him. That shit is over. Finally, you found yourself a friend. Then you run him over. Ever since the start, I saw the end around the corner, 'cause I know you so well. So predictable, you're an animal. I can't let you go. You're so good at being bad, you know. So predictable, you're an animal. I can't let you go. You're so good at being bad. You know I'm not gonna leave your side, and I can't deny it. Tried to play it cool, but I can hide my true desire, 'cause I can see the dirty in your eyes. My favorite liar, and I know you so well. So predictable, you're an animal. I can't let you go. You're so good at being bad, you know. So predictable, you're an animal. I can't let you go. You're so good at being bad. I can see the way you look at me, waiting to attack. You are on your worst behavior. I want it just like that. I can see the way you look at me, waiting to attack. You are on your worst behavior. I want it just like that.
I runs. How's the questions? Interesting? Easy or hard? Okay, not bad actually, oh. How many people score all the corrects? May I know? Oh, okay. 2 persons. Nice. Okay, so how's the questions? You found it very interesting or not? Okay. Sorry a minute, let me share my screens. Okay, so to be frankly, the question is actually very easy because that all model is actually provided. So basically you just need to put in the outcomes on these. But of course, don't be understand that those things that financial modeling is always that easy. No, it's not. Just because that I try to make it more efficient for you to understand, to have introductory about what is the overview about the financial model. That's why I make it more interesting only lah. So some of the committee come back to me mentions that the questions might be really hard, but to be frank, the only hard part is on the last three questions regarding the scenario analysis. So okay, so I'm going to emphasize on the because I assume that because these versions, this worksheet, the answer will be provided to you after the workshops. So I'm not going to touch much on this, but I'm going to discuss with you about the scenario analysis only, okay? So to you, Frank, scenario analysis. Okay, wait a minute, wait a minute. Okay. Oops, sorry. Scenario analysis. Okay. So the purpose of a scenario analysis is just to want to let you know, okay, the differences actually is that. So in the first question, it mentions that the volume increased to 105, right? 105 inches. 105, and then after that is the 20 years mark, 20%, right? So basically your need to change a bit already lah. So basically, yeah, that's why you can see actually from our models it's not really fully flexible one okay, to be frank. That's why we also need to do some adjustment to adapt into the outcome that we want, and also all the input that we are required to put in okay. So when you get out the 031 is 2033, so that's it, you get the values. And okay, then for the gross margin, okay, let's say if the gross margin drop to 40%, okay, let's say you get a 40%, then the cost of you will get, oh sorry, I forgot to change the bags. So then you get 105. Right. Oh, okay. So I can get 2557. Then what's the gross margin now for 2025 is gross margin, which you need to look at least. So the gross margin is this one. So to be frank, actually the answer is actually written down, and you need to do a research. So what I'm going to tell you, the meanings are going carrying out from the scenario is that we can actually change the input here one just to, so if you think that 5% is a bit high, so I mean that's why you need to fine tune the limit to things that, I mean, to make it possible lah, to make it like a bit like let's say for this one, the inventories normally you can see from the historical is 30% at 30 days, right? So what if I increase to 35 days? What is the impact? Say that will be another story already though. So that's why you need to compute the variances lah. Okay. So anyway, once again, I would like to emphasize that because this financial model is actually very easy questions lah. Okay, so but if you if you're really interested, that actually there are a few a few ways for you to learn and enhance about financial modeling. So I mean, before that, let me give you showcase about what is the what is the complex financial modeling models will be looks like okay, because I mean you can notice from the models they actually consist of a few types only, but you might be things that are a bit easier, but in the case that you can see actually this is one of the professionals levels financial models that we are looking on. So you can see that actually for your information, this is one of the models that I built, which I won the work financial modeling competition and world championships global top 2 lah. So just to share with you that in these models, I'm required to do some analysis, the valuations on the models for 4 companies, and at the same time, I need to compute the pro forma balance, means the pro forma effect, means the merger effects. So basically is that in this case studies competitions, I'm required to analyze that Coca-Cola as the main company, that they're going to require three target companies, one of the 3 target companies. So that's why the case study require us to make some analysis on the case lah. So that's why you can see actually that acquisition targets got 3, which represent 3 targets, and then the life scenario that will be bull case scenarios, the best case, the bull case, as well as the bear case. Okay, so you can see actually that every assumptions that plug in, it will shows a very different numbers lah. So this is how the professional level modelings will looks like lah. Okay, so if you are really interested, you can visit their website to get my model to have a reviews lah. Okay, once again, because I mentioned models, there are a lot of the patterns as well as the functions, and so it will depends on your objective to generate your models. So the models might be a bit different as compared to people's, because each of the people, my answers might become to be the same, but the outlook, the design itself might be a little bit different already. Okay, so now let's proceed to our workshops before we close it. Okay, so who will need these financial modeling skills? So who will be the one who build the financial model, and who will be the one who review? So you can actually to see that, I mean, most of it, the models will be built by the companies or the equity analysts or the investment banker or the private equity analysts. But I mean, although that some might be in the positions that to review, or some might be the position to build a model, or they are involved in both. Okay, so you might think that only business or finance people will need these kinds of modeling. That actually, in fact, you might be wrong. Why? Basically, you can see actually that I mentioned here that the investor, the entrepreneur, businessmen, or you are project manager also. Project manager, which you are maybe you are the person in charge doing in oil and gas, you might need to build models for that. So it's not really that only finance persons, finance related persons or officer that only required to know the models. Even the project manager, the oil and gas guy, or maybe the who else on infrastructures, construction guys, constructors, project manager also need to build the models. Just that the more complexity of the model might be various according to the people's, according to the project, as well as the understanding of the financial models lah. So because that's why you can show the valuable of the finance persons there. So that's one of the reasons that why we need so many finance people in all around the world, right? Okay, so the top myths, what I really heard. Okay, this one I really need your cooperations or maybe some reply from you lah. If my accounting knowledge is not good, so I wish to get a job in investment field, how many of you will have a similar a same view on it? Can you type up in the comments? Is it true or not? Or is that correct or not? No? Anyone? Anyone? Okay, never mind, never mind. Okay, because I'm going to say something harsh on it. Okay. Okay, so for those that or you or your friend that having these kind of thoughts, sorry that I'm going to, oh sorry, slap you to make you wake up. Okay, because actually the knowledge of accounting helps the investor to determine an asset value, to understand a company financials sources, calculate the profitability and the risk in the balance sheets. So it's very important that the investment must accommodate with accounting knowledge. So you cannot say that without accounting knowledge, you still can do well in the investment field. Sorry, no, it's not such things, okay? Because whenever involve investments, there will be involved of cash, involved of money. So when it comes to monies, accounting is the only way that can record your outflow or inflow of the company, your outflow and inflow of your company as well as your investments. So impossible that accounting will without accounting you still can do well in the investment field, okay? Unless you are selling investment, because even you do as a traders, you only trade for shares in the stock markets. You also need some knowledge, some experience to views about accountings, right? The accounting, the financial statements, like for example, what is impairments? What is impairment and what is the impact of the impairment to the company itself? Okay, many people, especially for those retail investors, I really I don't have such ideas of what kind of the accounting treatment. So basically, just a very simple way. We just look at the PE, look at the EV/EBITDAs, and compare to or the company only. But in fact, that this PE actually they got some hidden figures inside, where you need to take it out, eliminate out those figures to normalize the earnings so that you can get a proper PE. But many people don't do that. Okay. So for knowledge, what kind of knowledge that you need in the financial modeling? Firstly, Excel skills, quantitative skills. So your logical skills, because these, especially when you want to do the if functions or some sum if etc functions, that you need to have a very strong mindset on it, that if when you mean in the logical ways, that what result will get what answers, and also some design and organization skills where you need to design the outlooks like what I did for you. Okay, also accounting knowledge, and last but not least, the industry knowledge. What I mean by industry knowledge is the knowledge that you will need to require. Like for example, you want to do the company, do a financial models for a oil and gas company. Of course, you need to know that how the industry works, right? Like the upstream, downstream, that what is the cost embedded inside, and or maybe FMB, Then you also need to factor in that, for example, the spoil stocks. Also because F&B is can be say a very straightforward, but at the same time, don't forget that your food will be rotten, or then you might reserve a couple of percentage for the rotten materials. Or okay, also one of the consideration for you. Okay, so you might consider, what should I start? Why should I start? Where should I start? Okay, so basically very easy. Just start with any blank papers. Okay, just any blank Excel Word files, then you can just straight away start. You don't need any procedures and you need to do this, that, only can start. Because start, you can learn. Only you can learn. Okay. Okay, alternatively, if you get any budgets, you can go for this financial modeling and valuation analyst course, which one of my certificates is standing here lah. Okay, so if you can notice, but don't worry, don't get me wrong, I'm not selling the product. I even don't even get any commission from them, because just I personally recommend this because it's one of the famous financial modeling course in the world lah. So also is a e-learnings. Then of course, if students, I believe that there will be certain discount from the student price. Please go and do some research if you are interested. So I believe that the budget will be less than thousands or something like that, but I'm not really sure, so you go and check out. Okay, if you are students lah. Okay, because if you are not students, the full price will be 499 USD. So, but once you are a student, I believe that you will get a 50% or 70% discount on it lah. Okay. So alternatively, you may also take part in the CFA Institute Research Challenge. So, but unfortunately, UTAR only sent 2 teams for the Institute Research Challenge lah. So alternately, you can join the UTAR Equity Research Challenge, which will be organized in May lah. Because I would think that now is a very good opportunity to you to learn that how to analyze the stocks. If you are really interested in this investment management field, investment industries. Okay, so one of the ways for you to learn, because just to share with you a facts that how I get my jobs. Like when I go to interview, I not just go with the blank papers or blank hands only, empty hand only. I bring my report, because previously I was in the CFA Research Institute Research Challenge teams lah. So represent UTAR teams. So I personally brought my research as well as my models to show the interviewer. So this is one of the ways that you can do also in the interview. You do the reports, because now you got a platform for you and you got someone to evaluate you, all right? Then after that, you can use that evaluation to modify a bit your reports, and you can submit into the interviewer for them to have a review. So imagine two people with similar qualifications, that's right. So one will come with the empty hands, one come with the one of the report for you to test that to tell people that you know this kind of knowledge, you have this kind of knowledge. Which one you have the advantages, right? Think about yourselves. Okay, so especially now, I believe that UTAR Finance Investment is looking for teams, right? So maybe the committee later you can share a bit about the advantages, I mean the benefit, and how I'm going to join this equity research challenge. Okay. So anyway, I would think that it's a good chance for you lah, because the opportunity cost is so low only. The registration fee is so cheap, then the time also not really much consuming lah. So but at the same time, you can learn a lot of things, and then you can also learn how to analyze the stocks, and also at the same time, you can prepare for yourselves, or just treat like assignments for you to learn. Okay. So okay, practice make perfect. So don't forget, this is the first time we're very introductory. I make it like almost one of the easiest financial modelings case studies in the world. Almost, yeah, because yeah. And also I got some sample for you, right? So try and go and build yourself build your own models and try to learn, because there are still a lot of implication like in the depreciations where I mentioned that, I mean, the depreciation might depreciate, the PPE might be fully depreciated, right? So there's another proper approach to calculate the depreciations. At the same time, there's a few what we call revolver. If the company don't have enough money, then how? Need to borrow money for the bank, so right? So there's another parameter for you to compute what is a revolver, what or bank overdraft lah, and also a lot of things lah. So what if your company is making losses there? Making losses, then you need to cut costs. So there's also another scenario for you to take consideration. Okay. So if you really don't have any ideas of what to start for, then you just you don't have any budget to register for this course or any, I mean, you can just go Google or YouTube for the best for the materials. There are thousands of materials. To share with you one fact, in Singapore's and India's, I'm not sure about other countries, but these two countries, almost 50% of the graduate already know how to do a financial model, a proper financial models before they going out from university, right? So I believe that in our UTAR students, one of the top 2 university in Malaysia, I don't think there will be more than 10% know how to do financial modelings. Okay, even the lecturers might not teaching that much about it on it, right? So anyway, it's not a no harm for you to learn and equip yourself with the skills because you might not be, maybe you say that you might not in the finance industry, but what if one day you are the project manager or some company or one of the company or you are the entrepreneurships, then you want to build your business, or you got an idea on your mind, so you want to realize it, so you want to quantify it and see how much is the ROI, the return on investment you can earn, all right? So opportunity for you lah. So imagine 2 investors want to looking for funding from me lah. If let's say I got only 1 million, who I should invest to? One people with a financial model and clearly tell me that how much I can learn, or another guy that just told me is that my business how is making money, but how making money I can't answer it. They can't answer it. Of course, it's the one who will be the preparation, right? So just a consideration for you lah. Yeah. So of course, last but not least, to share with you one of my admired people, one of my own most admired people in the world. Okay, so the Dean of Valuation, Professor Ashwat Damodaran. Okay, so this professor is one of the most respected voice in the business valuation, corporate finance, and also investment philosophy lah. So just to share with you, if you are really interested in doing in investment bank or fund management field, and especially when you go in interviews, people will ask, I mean, your interview ask you who is your most respective people in the world, or something like that lah. Don't tell Jack Ma, don't tell Bill Gates, those kind of entrepreneur, but in the fact that it's not related to your career. Actually, they are looking for bankers, but not entrepreneurs. So you get what I mean. So that's why one of the consideration for you to learn. Okay, so what I'm sharing you today, another objective is because that he himself got actually a website, and which is globally used by all the industry professionals. So, and most important is free. So maybe you can take a look. If you already mastered the beginner level, you are looking for advanced level only lah. Okay, so I think that's all for my sharing. But before closings of this, I would like to take this opportunity to share with you. Okay, so there are a lot of people that I think that you invested in the stock market, right? Because why? You want to make money, right? So in the ways that financial modeling also one of the way for you to understand how the industry market works. Retail, there are a lot of retail investors in Malaysia, but don't forget, in retail investor is just a partial part of the investor only. You know, don't forget there are still the institution investor in these markets, and institutional investor always plays the significant position in this market, right? So no matter you are just a normal people that interested to stock markets, or you are, or just someone that not really in the finance industry, or you might be really interested to in investment industries. I don't know, but I mean, and this quote mentions, an investment in knowledge always pays the best interest lah. Okay, so I mean, no harm for you to learn additional, especially for those because maybe someday or one day you can use it. Okay, and of course, last but not least, UTAR is a very great university, but in terms of the view from the industries, our alumni network still not that strong yet. So there are not many people in these industries. There are not many UTARians in the finance and investment related industries. So don't think that you are the top 2 university in Malaysia that you are someone's good. You have to take additional effort for you to fight for the chance if you want to get your dream jobs or anything It applies to all the students, not just find people who interested in finance in investment field only. Okay, so what I'm doing to tell you is that make sure you learn yourselves and don't think because I got a few friends really thinks that he are really from a saying UTAR not you are really from a very good university, but in fact you are not. There are still others good and reputable universities like Sunways, or like overseas universities, especially from UK's or Australia's. They have a very much friendly English that use than someone from overseas students. Those consultancy firms or those prestigious jobs are firms like them more than you. Some, so you get what I mean, So yeah, try and learn how to and upgrade yourselves. And anyway, still a very good opportunity for you to meet you here. But I can see that in the good Saturday afternoons, I mean, I still can see you, and especially some of you that really participate in the financial modeling as well as the quiz section as well, and 2 of them hit the full points. So quite impressive, I would say that. Okay, so last but not least, thank you very much, and I see you if I got a chance to see you. Okay, thank you very much, and back to you, the MC of the day.
Okay, thank you, Mr. Jeff. So now I would like to invite all participants and Mr. Jeff too to have a photo session. So now all of you can open your camera and get ready for a very quick photo session. Come on, guys, let's open your camera.
Who is taking it?
Evan taking it. Evan, you ready?
Yeah. 3.
And you, okay.
Yeah. 3, 2, 1. Okay.
Freestyle. Okay, Evan.
Okay, done.
Okay, thank you,
Thank
Erwin.
you.
Okay, thank you, guys. Thank you, guys, for your cooperation. So, boys and girls, we have come to the end for today's workshop. Once again, I would like to thank Mr. Jeff Tan, for attending in today's event and share your valuable experience and knowledge. And thank you so much as well to all the participants for coming this event. So before you all leave, please do not forget to fill in the sign-in form. Yeah. So thank you everyone for attending today. See you all in our next event. Thank you.